Okay, we're live. Joe, welcome on the show. Thank you for coming.
Jake, thanks a lot for having me. Happy to be one of the very first guests on your program. I'm excited
Number
for
two.
Excellent. I love
Yeah,
it.
so having done a bunch of podcasts in the past for a few different companies I was involved in and also my own, I'm back doing my own thing, which I'm very excited about. And thank you so much for being guest number two. This first handful of 10 guests was, you got to get the ball rolling, right? You've been involved in content creation yourself. You can sit in the land of procrastination for way too long. It's like, okay, we've got to get this done. Who can I get involved? Yeah, so thank you so much for joining. Joe, to kick things off, I always love hearing these stories, and forgive me if you've told it a million times before, but I first came across you as a content creator, frankly, with your work with Nick Bartier and the Bitcoin Layer. And I'm like, okay, cool. How in the earth did you end up as an analyst writing those newsletters? And you can go back as far as you like. I always love the more context, the better. And we'll get to your current role and stuff by the end of the call.
Wonderful. I love it. Yeah. So it started all the way back when I was a sophomore in high school. So we're talking 8-9 years ago now. I was a sophomore in high school. I had joined the business club. I initially wanted to pursue medicine. That's what I wanted to do. And that was my intention all the way up through college. But one thing I did in sophomore year of high school was I joined this business club in my school called DECA. It used to be an acronym. It isn't an acronym anymore. But essentially what DECA was a way for students to compete in business case competitions. So basically mock consulting. We would do these mock consulting scenarios. We'd be given a problem and then we'd be tasked with solving it. We'd have if you were doing an individual competition, you'd have 15 minutes to prepare and then 5 minutes to present. And then if you were doing a team competition, you'd have 30 minutes to prepare and 10 minutes to present. And so basically I joined this club not knowing that I had any kind of passion for business or speaking or talking at all. Joined this club, immediately, breezed through my first competition. I placed first place in districts. So it goes district, states, nationals. I competed in states. I got third place. I made it to nationals my very first year. Got smoked, like number 19 or number 20 in the world or in the country. But I found that I had a real passion for business, not just business, any kind of specific business, marketing, sales, merchandising, whatever, but problem solving, right? Problem solving in a really tense environment. I loved that. And so I came back for another year. This time around, I began being more actively involved in the club. I was the president of competition prep for the next 2 years. And in that time, I competed in nationals again twice. So I made it to nationals every single time, progressively better each year. Every single time I was competing in this club, I was doing some form of marketing. So I did principles of marketing my first year, merchandising my second year, and then marketing my third year. But I had done this business club thing. I had grown it with a handful of my friends. We really built enthusiasm for the club. We built it from like 10 people, 10, 15 people, 20 people, really small, to the largest club in the school. Like over 150, 200 students who were in DECA by the time I was gone. And so that was my first foray into any kind of business thing, right? My whole life, I knew that I wanted to become some kind of pediatrician because I was in and out of the hospital so much as a kid. I had really bad ear problems. My eardrums weren't nearly as developed as they were supposed to be. So I constantly was having surgeries. And because of that, I was around doctors most of the time. And so I thought, okay, that's the career I want to become. I want to become a doctor. These people have helped me. This is what I want to do. And so I went to college with that intention. I went to the University of Vermont because they're relatively close to me and they had a really great medical program. When I got up there for orientation, though, I sat in my bed and I started to think, okay, so it's going to be 4 years of getting this degree and then 4 years of medical school and then 4 years in residency. That's 12 years of my life. By the time I'm done with this, I'll be 30 years old. And then I'll have $250,000 in student loan debt to pay off, right? And so I was thinking I could either go that route or I could just lean into what I was doing throughout all of high school, which is business. And so that's what I did. I switched my major into business away from biology, which is what it was. And I joined the business school. And then, in the business school, they gave you a free Bloomberg terminal along with your, your place in the school. So I started playing around in that, right? I was really interested because I know that the Bloomberg terminal is like the best financial tool you can get. You can get the best real-time market data. You can get basically every single market in the world, all the foreign exchange, all the global bond markets, real-time news, television. And so it's just like this great all-in-one tool. So I taught myself how to use it in the library, right? Basically, I didn't have much of a social life. My time was cut between me going to class, going to the gym, going to the library to do the Bloomberg terminal, and then I was also in an a cappella group. And so doing those things and then doing my homework before class the day of, right? I wasn't the best student. I got great grades, but I wasn't like the greatest, I wasn't like a standout student by any means, in that I did most of my homework either the night before or the morning of. That said, while we were already home for spring break, they said, don't come back because of COVID. And that really made me mad, right? Because I had left all my stuff there. I had only taken one single overnight bag for spring break, a handful of my clothes. My computer was still in my dorm. They wouldn't let us come back and get
Party time, baby.
Exactly. And so from that point, I got really jaded toward authority, right, as a result of what they did. And then I started looking into more of the lockdown measures, the efficacy of the vaccines. And that gave me a really high degree of skepticism toward authority. At the same time, I was home, right? I was home. I was no longer in the dorms. I was down closer to Boston. And so I was thinking, okay, what on earth can I do with all this time that I have on my hands? And I thought, okay, I really want to, when I get out of school, I really want to try my hand at entrepreneurship. I want to try my hand at building a company. What better way to, see if I have the chops for this than start some kind of business with my friends? And so I started a painting company with my friends, just hired a whole bunch of my friends as painters. We taught ourselves how to paint. And I ended up doing just over 6 figures in revenue, came out of the summer with like $20,000 in profit. And so at that same time, those two things kind of collided, right? I was really jaded toward higher authority, and I had run this business, and I was sitting on a lot of money, right, for a 19-year-old. And so then Bitcoin came around. This was the late summer, early fall of 2020. A buddy of mine from school, Tyler LaRoche, who currently works at Bitcoin Inc., reached out to me. I was asking him, like, what on earth should I put this money into? I'm really interested to know what you're doing. And he talked to me about Bitcoin. And instead of telling me to go buy as much Bitcoin as you can, he told me to read 2 things: The Masters and Slaves of Money by Robert Breedlove and The Bullish Case for Bitcoin by Vijay Boyapati. And I say in every single podcast that I'm on where I'm asked to tell this story, I name those 2 books because those are the 2 educational materials that got me sold on Bitcoin. And so, not necessarily super financially responsible, but I dumped literally everything that I had made into Bitcoin. Apart from what I had to use to pay for food throughout the year, I put basically all of it into Bitcoin, which was excellent timing because that was right around the time that Bitcoin went from, like 7-8 grand all the way up to 64 in 2021. And so I thought I was a genius. I was like, wow, this is extremely
genius, Joe. Come on.
Genius. Wow, look at it. But at the end of the day, right, it was just perfect timing all around the board. So it got me more intrigued. It got me intrigued as to how Bitcoin fit into the broader financial system. I was already using my Bloomberg terminal. And so I started doing more analysis of Bitcoin. I'd learned about on-chain analysis. I started incorporating Bitcoin into my markets kind of analysis framework. And I had all these thoughts and all these ideas, but I didn't really have anything to do with them. It's not like there are companies that are hiring for research associates for Bitcoin over the summer. Like, you can't intern anywhere for that. Now you can, like, there are companies like Galaxy where you could do that. But at the time there weren't many real options. And so what I started doing was posting all my research to Twitter. And this is following kind of after Dylan LeClaire, who was a classmate of mine. He also went to UVM. He had been doing the same thing for about a year. He had been basically posting all of his research, all of his insights, all of his thoughts about Bitcoin onto Twitter. So I figured I'd give it a shot as well. At the time, Dylan had 80, 90, 100K followers. I was just starting out. And so I started posting this weekly research report to Twitter, along with, a bunch of tweets here and there about the broader macro landscape, as well as Bitcoin, how it fit into it. Then around that same time, a mutual friend of Tyler's, Matt Snow, who works at Trammell Venture Partners, Nick Bhatia had reached out to Matt and said, hey, do you know any research associates? Because Matt Snow in the space, he's the grand networker. He knows where people work. He knows what people want to have jobs. He knows what people are, working where, and he knows what kind of people need to be hired at certain places. And so he asked Tyler if there was anybody he had in mind. Tyler pointed Snow to me, and then that's how I got connected with Nick. I went to a breakout room. I hopped on a call with Nick, and we hit it off right away. And he basically hired me immediately to begin in like this research associate role for the Bitcoin layer. And so I started, basically the Bitcoin layer at the time was just, it served as a sequel to Layered Money. Instead of writing a second book, basically Nick just wanted to do in real time markets analysis. And so it started out as like a fledgling Substack publication, 2,000 or 3,000 subscribers. And in my time there, from May of 2022 all the way through to today, actually, I'm still working at TBL in a smaller capacity. Basically, we built TBL from this fledgling Substack publication to this massive Bitcoin and global markets research outlet that now has 70,000 plus subscribers across all of our channels, tens of millions of views. And so that was my experience there. And so that's kind of how I went from where I was to becoming a market research analyst for Nick.
Well done. I love it. And that's the first time I've heard you draw all those dots together. So thank you for sharing that. If anyone's listening that's heard it before, well, what a great story. So enjoy it. The thing that I want to explore most in this podcast is, yes, I'm into Bitcoin. Absolutely I am. But essentially the lens on the world that an investor has to gain, they can get from different places, but it's essentially a decision-making tool. And what you've just walked us through is a series of different sets of decisions that could have gone in different directions with different returns on those ideas or choices. And so hopefully over the course of the podcast, next couple of years, it will become clear. It's an investment podcast with obviously Bitcoin's just shaking up the investment world so much that anyone that's not investing in Bitcoin, like why? And everyone that is, like, how's it changing the investment landscape for you personally, health, wealth, the whole picture. What I'd like to draw on is this whole thing of it's kind of just following your instinct, right? So just rewinding to that, the business club that you mentioned. So just an example. So what you were given a use case and you just had to get on the stage and just riff about whatever that was, and how they actually organize that.
Yeah, so it was interesting. So DECA it's a national organization, and then it's broken up at the state level, and then the state organizes these competitions. The format is there are different categories. Within every single category, there's a series of judges, and within the categories themselves, you're given a specific case, right? And the case could be something like, this is a family-owned business. They've been operating for 80 years. Recently, they've had a slump in sales. Come up with a marketing campaign that will help them drive sales, right? That's like a very simple example. You'd be given that case, that sheet of paper. You'd have 15 minutes to prepare basically your solution for this business. And then you go in and you do a mock presentation to them, right? You say, hey, I'm Joe from, XYZ marketing. Here's my solution for you, right? You can get as creative as you want. The sky's the limit, but ultimately, the people who can solve the problem the best, coupled with, great presentation ability, those are the people who succeed. And so that's how it's organized. And it's really good, right? It is able to give younger people a different way of, because for the longest time there have been, debate clubs, right? But largely that's catered to people who want to become lawyers and want to become politicians. There hasn't been until DECA, a way for people to see whether or not business and solving these problems in a real scenario is right for them. And so that's why I love the club. And for me, it showed me that I really love talking and I love solving problems. And so the role that I'm in now is that exact same thing. I get to talk every single day. I get to do, a daily show. I also get to analyze markets, which was something I found out later down the line. But that one decision to join the business club basically showed me that I was skilled in this area. And then it drew me down the path of working in business that showed me I could do all these other things as well. And the skill set I have today, by the grace of God, it materialized beginning there.
Yeah, it's cool. And so that's, in some ways, it's a spiritual thing, isn't it? It just kind of popped up and it's caught your attention and you've gone with it. And if there's anything I draw out of it, it's this idea of teaching yourself. So, you basically find yourself in this high pressure mock business environment and you really excel. It's why? Well, because you're teaching yourself to figure these solutions out on the spot and then be an orator for it, right? Speak about it. And the same applied to when you're figuring out the Bloomberg terminal. It's really actually as a skill set, what you want to invest in is the ability to teach yourself. And then it's a case of, okay, which direction do I point that in, or what catches my attention? And I find that infinitely fascinating. We never quite know where it's going to take you. But here we are today. It's become a big part of your life. I'd like to then draw on this idea of posting research online. And, the closer you get to Bitcoin, the more that you understand this idea of proof of work and how valuable that is. And essentially posting your thoughts online was a critical step on the journey to becoming employed in Bitcoin businesses. So what was some of the research that you were coming across? So, anyone that at some stage wanted to be a doctor is, numerically minded and scientific. But then when you reapply that kind of engineering type mind to the financial world, you get really interesting outcomes. So what were some of the things that caught your attention when you were researching Bitcoin as an analyst back then? And I'd love to dig into that a bit more.
Yeah. So one of the first big things that caught my mind was the long-term debt cycle. So book by Ray Dalio, released, I think 4 or 5, maybe 6 years ago now, about the long-term debt cycle. That's what caught my eye initially, right? And really the reality that the only way out of the current situation the US finds itself in is to debase the currency, right? It's to devalue the currency so that the debt we're paying back to people who purchased these promises from the US government would be to pay them back in devalued dollars. It's the only way out of a situation where we have 125% debt to GDP. The economy is extremely reliant on debt. So we can't pull back our issuance schedule. We have to just debase the currency. And so that was, kind of a really eye-opening moment for me, because it made me realize that, okay, this is the lens through which all of my analysis will be shaped, right? Until I go to my grave, because this is the reality the United States is facing, and I'm still talking about it today. So that was one of the most intriguing things I initially came across, for as to why we're going to be, in a multi-decade bull market for asset prices. And Bitcoin is the only absolutely scarce asset, right, in the universe, except for, of course, time, right? And so, but you can't invest in time. You can invest your time, but you cannot invest in time unless you're an employer.
An allocation in a sense. Yeah,
exactly. So, every single person makes decisions. We're all capital allocators in our own right. We're all deciding how to spend our time. And so, in the same way that we try to budget our time efficiently, it's like you want to be, given that this is a known outcome, like the United States, all fiat, every single government around the world is faced with the same issue to some degree. Basically, everyone is faced with a much worse issue than the United States. So we'll kind of be the last ones to really pay the piper for this. But given that it's a reality, it's an inevitability all around the world, as a capital allocator, you want to put your money in the instrument that's best designed to hedge against that, right? Because you want to preserve what you're earning, essentially, right? Such that down the line, you can spend your time doing other things, that aren't earning money, right? Retiring early, having a huge, or being able to leave your day job and then pursue things you're actually passionate about. And so basically, the Bitcoin thesis just boils down to that for me, right? It's the apex hedge against monetary debasement, which is a certainty given the US fiscal situation. That's what I came across early on. And then that really drove a lot of my analysis. The other thing too was Bitcoin as an emergent form of collateral. So obviously, and this came about when I started working with Nick over at the Bitcoin Layer in May of 2022. One of my first research pieces, called The Time Value of Lightning Network, was about Bitcoin serving as collateral. It's serving as the underlying financial rails for borrowing and lending in some future economy. Because, US treasuries are so widely used as collateral for borrowing and lending worldwide, but they're not the best, right? You can't liquidate them 24/7, 365. And the current credit system, as it's constructed around the world, is one that is fractionally reserved, right? Every single loan that most people take out is severely under collateralized. And in doing so, it kind of distorts borrowing and lending away from really high quality borrowing and lending, where the collateral is hard, you can't recreate more of it, to something that's, a lot more distorted, right? Lending isn't as high quality. And so I started writing about this and researching this in the summer of 2022. I put out that research piece. And now everything I talked about and everything Nick talked about in his original post, which mine was a sequel to, called The Time Value of Bitcoin, which he published on Medium, I think in 2017 or 2018, that's coming to pass right now, right? SAB 121 is rumored to be repealed by Trump, which will allow banks to custody Bitcoin, which means that Bitcoin collateralized lending is now going to be a possibility at basically every major financial institution in the US that wants to do it. And so everything that we were talking about 5, 6, 7, 8 years ago, or in my case, 3 years ago, it's now coming to pass. So it's really validating. Like it's vindicating for an analyst to say, okay, this is a prediction I made years ago. Now it's all coming to pass. Because it's just a simple reality, right? Bitcoin, you can liquidate it 24/7, 365. And because of that, it's not something that somebody needs an incredibly high credit rating for. Like, your decision as a creditor to lend to a debtor isn't so much based on like their credit score or other things, because lending in a Bitcoin world can be over collateralized, and it is. And all existing like Bitcoin lending solutions, Ledin, for example, most lending is occurring in an over collateralized fashion. And because there's more collateral than the loan value, the credit score doesn't really matter, right? Because if anything goes awry, if they stop paying you,
you just take
the money back. Exactly. You just take it. And so, it's all coming to pass now. And so, for me, that's really vindicating. And it makes me very optimistic about the future of the United States and the world, right? Just lending being more high quality in general is going to bring about, a huge era of prosperity, right? The less capital allocation, the better. And the more that lending occurs in a fashion that's totally separate from the Fed, like the Fed has no influence on what rate you're being charged on your over collateralized Bitcoin loan, because Fed funds does not matter. You're not operating in a US dollar environment. You're operating in a Bitcoin environment. And so whatever the Fed does doesn't matter, right? And the Fed is the reason all these distortions have occurred. And so for me, it's really encouraging.
You just mentioned something like the less capital allocation, the better. Was that what you said? Or you keep to a minimum or something?
The less distortions. I can't remember exactly what I said.
Okay.
But the less, these economic distortions that we see, right? For example, lending to people, I'll give a real world example. I know somebody who's going to one of the most expensive schools in the country. They've taken out several, $10,000, $20,000, $30,000 loans to pay for their semesters. They're at the most expensive school in the country. Guess what they're majoring in? Theater. No creditor worth their salt in a Bitcoin denominated lending environment would ever lend money to a student who was going to go major in theater, right? It just wouldn't happen. So basically that's something that cannot exist in a Bitcoin denominated lending environment that exists in the fiat world, right? Basically, it makes it so that all creditors care about is a return. And so long as they can make sure they get it by hook or by crook, then that's what they'll do. And it leads people to lend to very risky operations, to people who probably couldn't otherwise pay them back. With the Fed artificially manipulating interest rates, raising them, lowering them, raising them, lowering them, basically the incentive for banks, especially when it comes to student loans, which are more often than not very predatory, is to just lend to anybody with a pulse. That doesn't exist in a Bitcoin denominated lending environment, right? All that the creditor cares about,
give your Bitcoin away. Yeah,
you wouldn't. All that the creditor cares about is that it's over collateralized. So you're putting up more collateral than you want for the loan. And that makes for better investment decisions. It makes it so that, if a student couldn't get a loan to go to school for theater, they wouldn't go to school for theater. It's just that simple. And because that's possible in the fiat world, what it leads to is that person is going to be saddled with student loan debt that they can't pay back. You can't get a job as a theater major, right? You can go work at a movie theater, but you don't need a degree for that. You can go work at an art studio, but again, you probably don't need a degree for that. And if you do, you don't need to get it at the most expensive university in the country. And so their decision making, because they can't get that loan and they have to pay for that school themselves, chances are they decide to go into something else or to not go to school entirely. But because they were able to get that loan, that person is going to be saddled with $2,000, $3,000 a month interest payments for the next 20, 25, 30 years.
Yeah.
And it's just
a debt slave, essentially.
They're a debt slave, right? And that simply wouldn't exist in an environment where we had higher quality lending. And because Bitcoin is absolutely scarce, it's a superior form of collateral because it's 24/7, 365 and absolutely scarce. The creditor can call it back in any time. They could take, as you said, they could take their shit back. It makes for a better world where debt slavery is much less viable. It happens way less often.
And it's a really great word, that distortion, because the closer I've got to Bitcoin, the deeper down the rabbit hole, the higher my allocation, the more I've seen distortion everywhere. And it's like I'm going crazy, but actually I feel better, my life's better, and I'm happier. So it's like everything's hot versus cold or good versus bad. And it's like you're stepping away from this thing that was just so extraordinarily distorted, such that it's basically capital misallocation on an enormous scale.
Mm-hmm.
And the universities have a huge amount to answer for in terms of the system there, where it's like, come and take loads of debt, get this amazing degree, you're the best person in the world. And people end up with 2 degrees and they're in the local subway. It's like, you should never have gone and done that education because there was no market need for it.
Yeah.
And if there had been a market need for it, you wouldn't be in subway. And it's just this, it's completely crazy how much energy and time is being wasted on things like this. Now, that's not to say that theatre isn't a very, very important part of culture, but you don't need to go to the most expensive uni in the country to achieve that. I feel sorry for that person that you just mentioned, to be honest. It would be, instead of the ideal start to life, I think it's possibly one of the worst, right? Forever you're going to be in debt.
Rather than right out the gate, for example, right? If this person left high school and theater was their passion, had they, rather than going to university and borrowing to do it, had they just gone to the local theater, to a community theater, right? Or start auditioning for shows off Broadway, right? There are plenty of off Broadway shows that need actors, and then work your way up from there. Or, moving out to Los Angeles, right? Starting as some kind of associate producer or running coffee, right? The story you always hear about, Steven Spielberg began, or I'm just using his name. He began, running coffee, and then he began giving ideas to the associate producer, and then he became an associate producer, and then a stage director, and then this, and then that. And then now he's one of the most, lauded and syndicated directors globally. That's the ideal path for this person. But instead, what happens is during their high school years, they get bombarded with these student loan offers and societal pressures. You have to go to college. You have to go to college. And because that person doesn't know any better, right? Due to this system existing, but also due to a lack of education, you're right. Like, this is the worst possible start to life they could have. Instead of leaving college, no debt whatsoever, jumping right into a low-level job, they have no debt obligations whatsoever. They're getting out and they immediately have to find work. Otherwise, they default on these loans.
And it's interesting because it's almost like the opposite of teaching yourself to be self-taught. You know what I mean? Like what we've kind of touched on already. It's so interesting, Joe. Thank you. There's so many things I want to try and touch on here, but you mentioned something really interesting about the SAB 121. If people don't understand what that is, teach them. And what are the ramifications for us who have been accumulating Bitcoin?
Yes. So SAB 121, if you've heard of Custodia Bank, headed up by Caitlin Long, basically she has been trying to create a Bitcoin custody bank for the better part of the last decade, if I'm not mistaken. She's been basically blocked at every single turn. We're not going to charter you. We're not going to charter you. She's in the best state in the union for this. She's in Wyoming. She's proven that she can do this. She has all of the legal framework, all of the paperwork. Because of SAB 121, she just isn't able to do this. And other banks that want to do this as well, they can't. Basically, in a nutshell, it's this totally arbitrary regulation that basically disallows banks from custodying Bitcoin. It's a whole bunch of red tape. It forces them to classify Bitcoin held on their balance sheet as a liability rather than an asset, among a host of other things, which is so silly. And so basically it makes banking on a Bitcoin standard totally impossible. Repealing SAB 121 is massive because what it will be able to do is it will remove all that red tape. It'll allow these banks to classify their Bitcoin as an asset. And therefore, it'll allow them to basically custody Bitcoin if they'd like to do it, which means not only can you, for example, go to your bank in the United States and buy Bitcoin, like actual spot Bitcoin directly at your bank, and then your bank can hold it on your behalf. But the bank will also be able to go and create a bunch of new financial instruments, Bitcoin-backed loans, Bitcoin-backed mortgages, other things like that. And what it will do is it will more deeply integrate Bitcoin into the traditional financial system. So what I just talked about a moment ago, Bitcoin collateralized lending, that's now coming to pass with Trump really, really heavily rumored to be getting rid of SAB 121. And it's something that he can do. Congress passed a law to remove SAB 121, to repeal it. Joe Biden vetoed it, right? So very hostile act toward the Bitcoin industry. But it shows that once Trump is in office, this law can go through Congress again. Chances are it'll get passed. And once it reaches Trump's desk, because he's very pro-Bitcoin, he'll sign it into law. So the implications of this are staggering, right? It means every single US bank from JP Morgan,
Yeah,
the biggest
staggering
one,
is a
all
good
the way
word.
down.
Like,
Yeah.
yeah.
Yeah. They will be able to custody Bitcoin on behalf of their clients. So it'll be just as easy as going into your bank and buying a share of a money market fund or a CD, a certificate of deposit. You'll probably be able to go into your bank over the next 4 years, right? If this does come to fruition, which it probably will, and get a Bitcoin collateralized loan or a Bitcoin collateralized mortgage, or buy Bitcoin and have them custody it on your behalf. So it's basically repealing SAB 121 will bridge Bitcoin and traditional finance in a way that we've really never seen before. It basically it breaks down the floodgates, the final floodgate between Bitcoin and TradFi, which is the banks being able to hold Bitcoin.
Interesting. And of course, this is a pretty key area of the thesis for anyone that's been accumulating Bitcoin before now, which is like at some stage this thing's going to be owned by big banks. At some stage, nation states are going to own this thing. At some stage, it's going to be the base layer of money globally. And then you start looking at user adoption rates. They're very, very high in terms of speed, like new users, very interesting, faster than the internet, things like that, but still pretty small. I reckon we're still at that stage. Like you ask 100 people about Bitcoin, over 90 will tell you they've heard of it. But you say to them how many own it in self-custody in a meaningful way, and I think you'd be very lucky to get even a few hands. And so the penetration of this thing in a meaningful sense actually hasn't begun yet. And that's, like, as investors, absolutely fascinating. And so to compare what you've learned about Bitcoin as an asset class, what else might compete with it? Does anything come close? And from a portfolio construction, like as a research analyst, maybe I could ask yourself, what do you own? And is there anything else you could look at?
Right. So for me, the only other handful of assets that are going to really do well over the next decade plus are gold and U.S. real estate, right? Now, U.S. real estate is an interesting one because it's not going to appreciate to the same degree as, say, the S&P 500, right? The S&P 500 rises something like, its 10-year compound annual growth rate is something like 10 or 11%. So every single year it appreciates 10 or 11%. Bitcoin's 10-year compound annual growth rate is 89%. So every single year, on average, will appreciate 89%. Yeah. And its 4-year compound annual growth rate right now is something like 30%. Okay. So even still, almost 3 times what the S&P 500 is. U.S. real estate is only 4%. But the reason it's going to be such a great asset class for people to own, and I'm talking about stateside here, is because you can't live in gold, you can't live in Bitcoin, but you want to be able to live in a house and own that house. And so the reality is people are sitting on these homes that have probably an insane amount of equity in them, particularly, older millennials, right? And so over the next decade, which is going to be very inflationary, these two asset classes that people can buy and not live in, but are great inflation hedges, monetary inflation hedges, are gold and Bitcoin. Those are the two assets that are going to win out substantially. And over that period, over the next 10, 15, 20, 50 years, Bitcoin is going to demonetize gold, is going to surpass gold's size because it does everything that gold does, but better, right? It is a better store of value because it's absolutely scarce, not just relatively scarce, because Bitcoin does not have a supply response. So with any other asset, stocks included, and gold, whenever the price goes up, the supply goes up right along with it because the people who are creating more of it, whether you are a company or you are someone who owns a gold mine and actually sells gold, you say, hey, look, the price is going up. That means we have more to invest, in equipment. Let's buy more drills. Let's get more of the stuff out of the ground. And then eventually that puts a downward pressure on price, on the individual unit price, right? Same thing with stocks, right? If a company is doing, let's say, take NVIDIA, for example, them doing 2 10-to-1 stock splits over the last several years, I believe. That's because the price appreciated to such a huge extent that they said, all right, for every 1 share, you now own 10 shares. We'll cut the price all the way down. That way we can issue more shares, right? Ultimately, it dilutes the individual unit price of that asset, whether it's something more paper like equities or whether it's something very tangible and real like gold. Bitcoin has no supply response whatsoever. As the price goes up, Bitcoin miners can't collude with each other and say, you know what, let's increase the block reward from 3.125 Bitcoin every 10 minutes to 10. Let's enrich ourselves because the Bitcoin price is going up. Because it has no supply response whatsoever, every single model, economically, pricing-wise, is totally broken. Because for all of history, there's always been a supply response. Whenever the price of something goes up, more of it gets put into circulation, it becomes worth less. Or in the case of something like tulips, it becomes worthless. The tulip bulbs going totally insane in Denmark and Norway and Sweden. All of a sudden, let's just plant more flowers, right? And then the value of the tulip bulb goes down. You can't do that with Bitcoin. So to compare it to any of these other assets that are a bubble where more of it can be issued, or suddenly it can all collapse to zero, A, more of it can't be issued, and B, it won't suddenly collapse to zero because the value proposition doesn't go away just because a whole suite of people say that it's worthless. The reality is that Bitcoin's price continually going up year after year over the last 15 years, 16 years now in a stepwise fashion is just proof that this value proposition is becoming known by more and more and more and more people. So Bitcoin is an idea whose time has come. It serves that property of an inflation hedge better than gold because, again, it's absolutely scarce. It's also more portable than gold, right? You can't travel across borders with $1 million in gold. If your home burns down in Los Angeles, for example, looters may break into your home and steal that gold. You can't evacuate with your 50 gold bars. You can't evacuate with your seed plate in your pocket, right? Or your hardware device in your pocket. And so Bitcoin performing gold's functions much better than it does, even though those two assets are going to be the best performing over the next decade because of how inflationary it will be in the next 20, 30, 50 years, as I mentioned. Bitcoin will slowly but surely eat away at more of gold until it is larger than the asset itself. So as an analyst, obviously, I want people to live in a house and I want them to own it. But for younger people, right, renting is not a bad idea because of where mortgage rates are now. And so, for me, what I own is I own a mix of some higher beta equities. I own Bitcoin, obviously. I own some U.S. Treasuries. I put a relatively small portion into U.S. Treasuries when rates were around 5.5%. And I'm really happy that I did that, right? Because now for the next 2-3 years, I'm receiving fixed payments of 5.5%. Monetary debasement is, coming in at probably 3.5% every year versus the reported 2.5-ish%. And so, I'm receiving basically free money from the U.S. government. But that said, it's not something I would advise people to put their whole portfolios into. It's risk-free in the sense that, the U.S. government's never going to default. We can't, otherwise the economy is going to collapse. We're going to spark a world war. So, I'm receiving these fixed interest payments, these coupon payments, and then at the very end of it, I'll get repaid my entire principal. But largely because of the way the world is headed over the next decade, I own a mix of equities, Bitcoin, and some U.S. Treasuries. But as rates come down, those become less attractive. But then the upside to that is if I ever wanted to sell the Treasuries that I own, I would get a huge markup on those because yields are lower now. Yields were higher then. My Treasuries are worth more now. And so let's say before the maturity of my Treasuries, I want to sell these things, then I can get way more for what I, for my dollar than what I paid for them. And so for me, it was a tactical move to buy some Treasuries when rates were that high because I knew that was going to be the cycle high. That's what the market was saying. But for most people, right, if you're constructing a portfolio, you ultimately want to look at what's going to happen with the money over the next several years, right? Forget, you can look at trends like AI and all this other stuff. But largely, if you're not owning the huge names like NVIDIA and the like, you're going to underperform, right? The chances that you're going to find some kind of penny stock, some kind of brand new company that's, hot on the scene and outperform Bitcoin is extremely low. And so for most people, right, you don't have time to be your own analyst, or you don't have time to hire a financial advisor to do this stuff for you. And so and of course, not financial advice, but if you're just looking at the monetary reality of the next several decades, you can just own Bitcoin, basically outperform everybody. And so that's what I advise people to do. The lion's share of my net worth is in Bitcoin. I have a few other things here and there, but that's purely for some potential beta on top of my Bitcoin. The main horse that I'm riding, right, in this race is Bitcoin. And that's what I generally point people toward.
Awesome. Thank you for sharing, Joe. I always love asking people what they actually own because it kind of cuts through all the other stuff we might talk about. So, okay, he actually thinks that and has actioned that in some way. You just mentioned some beta. So for those listening that may not understand what you mean by that, could you just explain a little?
Yeah, so beta is sensitivity to the overall market. And so basically, if we give, for example, a stock has a beta of 1, right? Then it moves basically neck and neck with, the S&P 500, for example. If something has a beta that is a much higher value, right, then it moves with much higher sensitivity to the overall market. Bitcoin itself has an extremely high beta. The way that it's traded right now is not the asset that I just explained, right? This absolute apex hedge against monetary debasement. It actually trades like a very high volatility tech stock. And that's because the market doesn't yet fully grasp what this thing is. They believe it's a play like something in the NASDAQ. They believe it's something like a tech company that is a really high price to earnings ratio. It's very volatile, and that's how the market trades it. But in reality, it's actually this extremely risk-off play. In fact, it shouldn't be, and ultimately it won't be correlated to anything. Bitcoin over the next 50 years is going to become the least correlated asset ever. The only thing it's going to be correlated to is the global money supply. Since September of 2023, we've seen it much more correlated to the money supply than it ever has been before. And so it's in the very early stages of breaking those correlations, but it behaves like a high beta risk asset, right? So a risk asset is something that is something like a tech stock, right? Something that's generally risky, but can offer a higher return in really good times. And so that's how Bitcoin is traded. So, beta is just sensitivity to the market. The higher beta you have, the more sensitive the asset is. And so if you're in a bull market, you want to have a decent chunk of high beta stuff in your portfolio so your portfolio can appreciate more than the overall market. That's the idea.
Awesome. And fascinating insight that a lot of people won't necessarily have thought about before. And behind you, Joe, I can see the Theya logo on the wall. I'd love to learn about your experience with that business. And we chatted for the first time because I was a user of the products you guys are building. So what was how do I say this properly? Yeah, so when did you join the business? Why did you join the business? And I'm also really interested in early stage equity investing. And I'd just be interested to get a bit of a grasp of what it feels like inside a company that's clearly, done a round of financing, getting lots of users, doing something really important, which is kind of simplifying the ability to self-custody. So what's life like with Theya? And I'd love to learn about that.
I'll say right off the bat, like, I'm so grateful, right? Like, all glory to God that I'm here right now, because this was working at a startup, or at least starting a company, was my dream. It's
Awesome.
It's been my dream
Well
for
done,
a very
mate.
long
Well done.
time. Thank you very much. It's been my dream for a very long time, right? Since I had that initial inclination, about 9 years ago as a sophomore in high school. This is something I had wanted to do. It only became clear to me, in 2020 when I began that business of my own. So being here is just so fun, right? It's a very talent dense company. So we only have about 7-8 people working at Theya. That includes all of our co-founders, myself working as the head of growth, our design lead, and then our 2 additional engineers that we have on a part-time basis. And it's so fun. It's really fun because we move really fast, right? We're able to take user feedback and then implement it and create a feature and then push it live within a week of people, inquiring us about it. And also being this early, building this company, and I'll explain a little bit about what Theya is in a second, but it also offers us the ability to, be really flexible in our roadmap, like what we want to do. So for example, I joined the company right after we launched. So the company's been around since 2022. We've been fundraising for that long. I was not a part of the team then. It was just the 3 co-founders, right? So Smeet, Sharam, and Vikas, all extremely brilliant, right? Combined, they have decades worth of experience in tech, in finance, right? And so they were basically, building this application for a couple of years, getting funding for it. I joined just after we launched the application in January of last year, right? So I've been on board for actually over a year now, just over a year. And in that time, basically we've taken this concept, simplified Bitcoin self-custody, right? If you want to do a single key or you want to do a multi-key setup. And we have found such fantastic product market fit. Like, this idea actually worked, which is so vindicating. I mentioned earlier that when your predictions from years ago as an analyst come to the fore, it's really vindicating. Same thing with building a consumer product, right? And so the idea of basically taking all of that complexity from something like Sparrow and being able to put it in the palm of your hand on your iPhone or on web now, which we've now launched, and make it so that users can construct a multi-sig Bitcoin wallet in minutes. And to see that there's actually a huge market for that is really, really vindicating for us. We went from, again, pre-launch, a handful of users, basically no Bitcoin being in the wallets created by the platform, to now...
Where is everyone?
Exactly, right? To now hundreds of users and several thousand Bitcoin in wallets created on the platform.
Wow.
So it's really vindicating. And, the other thing too is, like I mentioned, the flexibility of it. We were able to identify about halfway through last year that consumers weren't the only market for simplified multi-sig. Like, there are financial advisors out there that are now becoming more prominent than ever. More financial advisors are popping up on a daily basis who have clients that are banging their door down about Bitcoin. And generally speaking, most financial advisors will point them to the spot ETFs. But the financial advisors that know a lot about what they're doing when it comes to Bitcoin understand that the ETFs are not actual ownership over spot Bitcoin. And more clients, as they learn about Bitcoin's utility, they want to have access to real spot Bitcoin, right? Real ownership, real holding, real custody of your private keys. And so we then went and said, okay, how can we retool this product for financial advisors? And we created Theya for Advisors, which is basically the Theya product with a different key arrangement that allows financial advisors to set up basically master keys and onboard the clients into collaborative multi-sig vaults with them. And it's so easy. It's so seamless. And so from the retail end, right, if you're not, using a financial advisor, you download the app, install it on your phone, on iOS, Android coming very soon. And then you can get started right away. There's a 2-week free trial to begin. You can choose any Bitcoin-only hardware wallet that's on the market, basically most of them. And there's very little technical experience required. And that was the idea from the get-go. Hardware wallets are intimidating in and of themselves. Multi-sig, forget about it, right? And solutions that exist today, while they're fantastic, they require a lot of hand-holding, right? A lot of consultation calls, concierge onboarding calls, one-on-ones. With Theya, we wanted to remove that for the most part and put it all in the hands of the user. And given the fact that I'm taking very few one-on-one concierge calls, most users are able to set this up on their own. It shows that we've achieved what we set out to do, which is totally self-custodial, multi-sig, DIY, in a very sleek, user-friendly package. And we've shipped that now. And now basically it's just about tweaking it and fine-tuning it to what users want and user feedback. And so it's extremely cool. Working in this startup and a Bitcoin native startup, a fun fact, the first and only, and I think I've told you this, the first and only Bitcoin only company that has been successfully funded by Y Combinator, class of winter 2023. It's extremely cool. And it's a recognition from, the biggest banner Silicon Valley VC firm that what we're doing is very impactful. And it's extremely fun. Like we've experienced such great user growth. I've had a fantastic time, and the future is very bright.
Well done, and good luck to the next phase of growth. I'd be lying if I didn't admit that when I was looking at different products to recommend to people in a coaching program I was running, that when I saw Y Combinator as an investor, it's an immediate tick of approval, having spent years in and around the startup space. In that they just don't mess around, those guys, and know that this is a company that's going to be around for a while, because they'll have every single VC that's in their friendship book being like, come on, get involved in this business. And so the key is obviously sustainability. You don't want to be burning too much cash, etc. But that's a conversation for another time, and private information that we don't need to discuss on this call. It's a great product. I've started using it. I do definitely fall down to, well, basically everyone's at different points on their journey. And I'm a big proponent of people taking full responsibility of their Bitcoin, i.e. it's the individual that does the multi-sig themselves. And Theya is good for that, because you can have 2 keys that you run it yourself, put in different location, boom, inheritance plan, and you're in business. There's wealthy people out there that still like using financial advisors, but I'm personally very wary of this collaborative model, because actually the moment that you have to call someone to move your Bitcoin, it's not self-custody. And yes, it's true that a combination of a financial advisor, Theya, and a user have together got control of actual Bitcoin rather than an ETF. So it's an improvement on that.
But the individual doesn't have majority control over it.
Correct. So you still need collaboration to actually move it, which
exactly.
I guess there are some, basically the further down the hole you get, that solution works for a bit. And then I think there's another layer to it. But that, I guess, is the Bitcoin rabbit hole in one, isn't it? It's just like,
exactly,
how much deeper does this thing go?
And then once, you own it, you experience the appreciation. Like, some people come in for the self-sovereignty technology. Some people come in for number go up. The majority of people are coming in for number go up. But once the number goes up, they want to know why it went up. And they go down the rabbit hole and go down the rabbit hole. And so while they may use a financial advisor at one point, down the line, they very well may say, all right, I'll take it from here, right? I want all my keys, or at least I want majority control over my keys, someone to help me out in case something goes wrong. I don't need you anymore. And so it's like training wheels on a bicycle. In the same way that like Theya is a really easy way to assemble these multi-sig vaults and get you going, and you have majority control over your keys from the get-go. Some people need those training wheels, right? And so that's the role that financial advisors play. But I completely agree, right? Down the line, and even some financial advisors we brought on board have said, look, I don't want to be a key agent. And so some of the financial advisors that are using Theya for advisors have a special structure where the majority control is in the hands of the individual.
Okay.
And so it varies from person to person, but it's all about where these people are on their Bitcoin journey, if they need those training wheels or not.
I might have to set up another call with you to discuss what that looks like, because I have people all the time that I'm coaching about Bitcoin in whatever capacity, and that would work better. I'd feel much more comfortable not being in a situation where I control someone's Bitcoin. But that's for another time. How cool. Okay. And that's the whole point of the user feedback as well. It's like, no, this doesn't quite work for me because of X, Y, Z, but could you build something slightly different? Gosh, cool. Well, Joe, I know we've got an hour, so another few minutes to go before we wrap it up. We're at the very start of 2025. Last year, like the ETFs, I mean, I think they blew everyone away, frankly. I mean, even BlackRock's like, holy shit, this is big. Prediction time can be a bit kind of pointless, price and timelines and things like this. But what are you most excited about in 2025 from a kind of portfolio growth perspective and the investments you've made?
Mm-hmm. For me, I'm most excited about what this next year holds for Bitcoin, right? It's pretty pivotal for a number of reasons. Like one, just from a Bitcoin native standpoint, we've had these 4-year cycles since the dawn of Bitcoin. Up, 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 down, up, 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 down. I'm curious to see if that holds into the next year, right? Bitcoin ended 2024 at something like 94K, right? So we're already, green on the year. But the reality is, right, if Bitcoin doesn't end the year in the green, then that 4-year cycle is broken. I mentioned earlier that all models are broken because of the fact that there's no Bitcoin supply response. And so on a long enough time frame, I am curious to see which of these traditional Bitcoin mainstays, such as the 4-year cycle, go away. So one thing I'll be watching out for is whether or not this year holds up, right, within the 4-year Bitcoin cycle. I am looking forward to all of the geopolitical developments around Bitcoin, because suddenly last July, Bitcoin became a geopolitically critical asset. And this was at the Bitcoin conference in Nashville when Trump announced that he would be creating a strategic Bitcoin reserve. If there's one thing we know about Trump, he doesn't get everything that he promised done, but at the very least, he attempts to get everything that he promised done, right? For example, with the border wall, all of the red tape he had to walk through in order to get that done, he only got started with construction in like late 2018, early 2019. So literally 2 years into his term until he was able to get this done. Versus the strategic Bitcoin reserve, which is something that can be established on day one. And day one is obviously metaphorical. That could mean, in the first 10, 15 days. There are a number of paths he could take to do this. The Bitcoin Policy Institute put out a wonderful paper done by Matthew Pines. It's basically a draft executive order to use the Exchange Stabilization Fund, which is basically a huge pile of cash and gold that the U.S. is sitting on, to divest it from those assets and invest it in Bitcoin. He could do that on day one without congressional approval, right? He has the power to do that. The other thing he can do is simply reclassify our existing 207,000 Bitcoin as a strategic Bitcoin reserve. Those are the two things. But the most important thing is that last July, with that announcement, all of a sudden you have all of our adversaries and all of our friends as well discussing this, right, at the national level.
Should we do it too? Yeah.
Exactly. You have credible rumors out of Russia. It sounds like a joke, but you have the finance minister talking about a national Bitcoin reserve, and Trump's a very competitive guy. The moment you tell him, hey, Russia's considering this, he's going to, be all the more emboldened to get this started as soon as he can. And so what I'm most excited for is how these things take shape. In 2024, BlackRock became the Bitcoin marketing department. They had these ETFs. And so this company that, once was totally hated by the Bitcoin community, it's now working for us, right? They're trying to sell this product, whatever, but ultimately they're trying to sell Bitcoin to their clients. And granted, it's held by BlackRock, but BlackRock doesn't have any influence over Bitcoin whatsoever. They can't change the rules of the protocol. They're just the marketing department. So in the same way, in 2025, it's kind of like the same story. Whereas the US government, especially the libertarian side of the Bitcoin community, hated for so long, they're now going to become the Bitcoin marketing department. And so it's very, very cool to play out, right? Bitcoiners are kind of sitting back on their throne and laughing as all of these adversaries to, OG Bitcoiners are now becoming our marketing department. But for me, it's just a testament to how important this asset ultimately is. The world's largest asset manager in BlackRock saying that this thing is important, that's a substantial development. And now the world's largest superpower is saying that this is a geopolitically important asset. That's a massive development. And it's a validation of the Bitcoin thesis, right? This is the best money because it's the only money. It's the only money that's completely hard, cannot be influenced by anyone, anywhere, for any reason. It is an absolutely fixed monetary policy from now till forever, until the world ends, right? And the US is recognizing that. It's kicking off this kind of global Bitcoin arms race. So for me, regardless of price, I'm just really excited to see how this all unfolds.
It's very exciting, isn't it? There was a phrase that came to mind, this idea of a Veblen good, which is essentially the economic phrase for where as a product becomes more expensive, the demand goes up. And that's essentially what Bitcoin is. And it was really helpful. You were talking about this earlier about supply and demand. I used to work as a shipbroker, and I was very close with the commodities business, in particular iron ore. And everyone's following the iron ore price because obviously the higher the iron ore price gets, the more realistic it is to go and search for more iron ore. And so they'll dig in different places. And this particularly West Australian iron ore that we were moving up into China and Japan and Korean steel mills. And that just doesn't exist with Bitcoin. Like you cannot overemphasize this. If the price of Bitcoin goes to $1 million, you can't just go and find more of this stuff. And that's why I think it is actually a Veblen good. And that's normally used in relation to like high-end luxury products, like a handbag that's supposedly super scarce, and therefore someone wants to pay $5,000 for it, so I'm going to pay $10,000 for it, and the demand goes up as the richest people are like, no, it's for me. Oh, well, Joe, what a brilliant way to end it. I think there's a lot to be very excited about in the year to come. Well done on your progress and all the journey you've walked us through. So thank you so much for your time today. I really appreciate it.
Thank you, Jake. I appreciate it, man. Good chat.
Thank you.